What if the government actually gave you a legal way to pay less in taxes, and most people just ignored it? We are talking about tax-advantaged accounts. IRAs, HSAs, 401s, sitting right there in plain sight like a cheat code nobody bothered to read. Here is the uncomfortable truth. The average American overpays thousands in taxes every single year because they never learned how these accounts actually work. That is not a conspiracy. That is just a very expensive gap in financial literacy. Think of the IRS like a landlord who offers you a discount if you prepay rent in a specific way, except almost nobody asks about the discount. These accounts are essentially that negotiation built directly into the tax code, waiting for you to show up to the table. A traditional IRA lets you contribute money before it gets taxed, reducing your taxable income right now, today, this year. A Roth IRA flips that. You pay taxes now, and everything that grows inside that account comes out completely tax-free in retirement. And then there is the health savings account, the HSA, arguably the most underrated financial vehicle in existence. It gives you a triple tax advantage. Contributions are tax deductible, growth is tax-free, and withdrawals for qualified medical expenses are also tax-free. Now here is where the irony gets almost comedic. People will spend 45 minutes clipping grocery coupons to save $6, but will not spend 45 minutes opening an HSA that could save them thousands. We optimize for the small and ignore the enormous, which is very on brand for how humans handle money. The contribution limits do matter. And yes, they change periodically, so you have to stay current. For 2025, the IRA limit sits at $7,000 per year, $8,000 if you are 50 or older, because the IRS has a soft spot for late starters. A common misconception is that these accounts are only for wealthy investors or people close to retirement. That is flat out wrong. Even putting in $100 a month into a Roth IRA starting in your 20s can compound into something genuinely life-changing by the time you hit 65. History backs this up pretty loudly. People who consistently contributed to tax-advantaged accounts through the 2008 crash, through COVID volatility, through every headline that screamed "sell everything," came out dramatically ahead of those who panicked. Discipline inside these accounts has a compounding effect that is almost boring in the best possible way. The strategic play here is sequencing, understanding which account to fill first based on your current tax bracket versus your expected future bracket. If you think you will be in a higher bracket later, lean Roth now. If you are in a high bracket today, lean traditional and take the deduction while it is worth the most. We also need to address the people who say, "I will just invest on my own and skip the accounts." And look, respect the independence, but you are voluntarily handing extra money to the government. That is like refusing a free upgrade at the airport because you are loyal to your middle seat. The real lesson from decades of financial data is not about picking the perfect stock or timing the market. It is about using every structural advantage available to you consistently and without drama. Tax-advantaged accounts are that structural advantage, and ignoring them is one of the most expensive decisions most people make without even realizing they made it. At the end of the day, what separates people who build real wealth from those who stay stuck is not income. It is the boring, disciplined, unsexy habit of using the right containers for your money year after year. Conviction matters less than consistency, and timing matters less than just showing up every single year with your contribution. Whether markets are roaring or stumbling, whether inflation is cooperating or not, these accounts work, and that reliability is genuinely rare in the world of personal finance. You do not have to have it all figured out. You just have to start, stay consistent, and let the structure do the heavy lifting. And if you are ready to take that next step, whether it is real estate investing, home contracting work, or finding the right lenders to help you build long-term wealth, check out our links in the description below.